by Boogles the Bookkeeper. So we're going to explain this, and I really hope you have a light bulb aha moment. Okay, so this is quite shocking. Over Christmas 2010, one of the UK's largest banks held a webinar, and they said that 90% of business people lack basic financial intelligence. Most will pay an accountant to explain what's happening in their business and yet still have no idea what their accountant is telling them. Absolutely shocking. So what are we going to do in this very brief little presentation? We're going to look at a profit and loss account, we're going to look at a balance sheet, and we're going to look at how it relates to cash flow. In simple English, how does money work? Okay, so in this example profit and loss, what we can see is the sales turnover. Then we take off what's called the cost of sales. So this is the direct cost of getting that product or service into production. So that might be stocks, direct labor costs. You take off the cost of sales from the sales turnover, you're left with the gross profit. Then you take off the expenses and you're left with the net profit before tax. So looking at this example, it looks like this company is actually quite profitable, £4,209 or dollars, but we're going to look at this a little bit deeper. Now you have to look at where does the money go. And this is one of the things that bookkeepers like Boogles do. Looking at the receipts, you can see where your money goes, because a lot of people think, yep, okay, great, made a profit, but they still can't quite understand where their money's gone. Look at these expenses. These expenses are going to tell you where your money goes. Many people don't know, but analyze them, and what you'll often find, unfortunately, is that a lot of it is on waste. It does go almost, down the plug hole. Now, looking at an example of a balance sheet basically is made up of your assets. Some of these are fixed and some of these are liquid, as in this is what you're going to use within your business, whereas things like fixed assets, equipment, you don't really want to be selling your equipment because that's what you're using in the business, but the current assets are things that you're going to use in the business. Now your debtors is a key figure to look at. That is how much people owe you. So sometimes you can, when you look at a profit and loss account, look very profitable on paper, like a decent profit, 4,209. But if these actual sales are on what's called credit, it means that you're not going to get this money in immediately. And when people owe you money, that money is sitting there on the debtors, on that part of the balance sheet. So sometimes you can look very profitable on paper but yet have very little cash in the bank, because these sales that you've made, these fabulous sales, are actually on credit and the person or the people, the companies, haven't paid you for them yet. And this is where we introduce this concept here of cash flow. So cash flow is all about the timing of payments. So as soon as this sale comes in as cash, we're going to see that sitting there as cash, either in your hand if they paid you cash in hand, or if they paid you directly into your bank account in your deposit account, you're going to see that figure there. Until they've paid you, it's not going to reflect. Likewise, liabilities, people who you owe money to, your creditors, could be the Inland Revenue, the government, could be the VAT people. Current liabilities is the money that you owe to other people. So these expenses could have come out of your account in the form of cash because you've already incurred them, you've actually paid for them in cash, or these expenses could be sitting there as creditors, the people who you still have to pay physically in cash. And what cash flow is, in a nutshell, is what comes in your income. Think of it as a bath. It comes in and then it goes out as expenses down the drain. And in terms of cash flow, you always want more income coming in than you have expenses going out. And when you think of your cash flow, you have to look at, okay, these are your sales, you want to realize this into cash as soon as possible, and these are your expenses, and it's all about managing the timing of these things. If everybody who you owe money to comes to you and asks you to pay them, you're going to be in difficulty if all the people who owe you money haven't yet paid you. So almost in business, in life, in anything, it's constantly juggling that flow, that inflow and outflow. Now, if you're feeling pretty broke at the moment, there are some possible reasons. It could be that you're selling a lot on credit, therefore out goes all the goods and the people haven't yet paid you for your product or service. It could be that your sales are too low, and so you're trying to manage high expenses, but the sales aren't justifying it. Could be that your expenses are too high, you're just spending too much and you need to just sort of cut back. So they are a few remedies for you. Some recommendations: increase your income, reduce your expenses. Take a look at this website, whyouarebroke.co.uk. It'll give you a few more ideas. And by all means, get in a Boogle's bookkeeper who can make sure your people are paying you and you're managing your cash flow in a better way. That's one of the benefits of bookkeepers. So, how money works. There's a light bulb that I hope went on for you. There is a book called Bookkeeping Made Simple, The Boogle Story, written by Lisa Newton, available from Amazon and all fabulous bookshops. So do check that out, boogles.co.uk.